You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, your host. Today is 2/14/22, and it's time for another Triple Lutz report. This is report number 490. Been a while. Figured I'd bring you up to date. If you've been watching the news, you heard that inflation just hit a near 40-plus year peak. The government admitted inflation rate, 7.5%. Last time it was that high was back in around 1980, if you can believe it. So what to do? Well, first of all, understand that the inflation rate is not accurate. It never has been. It never will. Back in the 60s and 70s, and even up until 1990, it was calculated in a much more honest fashion. But due to changes over the years, it has been greatly diminished. It's not hard to believe John Williams, shadowstats.com, he's been calculating it the good old-fashioned way, and he's claiming the rate is nearly double or more what the official government rate is. So here's the question, what do you do? A lot of questions, obviously precious metals. I'm a firm adherent there when the time is correct for them, which clearly it's getting more and more advantageous to own precious metals. Also oil, other commodities, all booming and all apparently on the verge of another super cycle. But if you're like most people, you aren't in the position. You can buy some gold, you can buy some precious metals, you can buy mining stocks, you can buy commodity stocks. Speculating in nat gas, speculating in oil through options and futures, that is potentially dangerous business. But so can investing in mining stocks can also be dangerous. A lot of questions I get, real estate. Is real estate a good place to be now? Is the market going to collapse? Now, if you've been watching the show, my recent interview with Martin Armstrong, recent interview with Greg Manarino, and many others agree that the stock market is going higher. I don't know that that's going to be the case. And I wouldn't say plow all your money, all your loose change into the stock market now. I would say you do it over a period of weeks and months if you're going to be investing. What I really like, though, is real estate. And let me tell you why. First of all, mortgage rates, right? Whether you're buying commercial property, multifamily, or single family homes, which I happen to think are really great investments, mortgage rates are artificially pinned down by the interest rate policy of the Fed. Even though the 30-year is and the 10-year up over 2%, mortgage rates are still below 4%. And certainly what you're seeing here, if we assume, just for the sake of argument, that inflation really is at 7.5%, and you can get a 3.75% mortgage, you are paying a real negative interest rate, a real rate of -4%. Effectively, due to the government's ridiculous interest rate policies, which are necessary for a number of reasons, you are being subsidized to buy real estate. Now, recently I bought a home. It's gone up over a third since I purchased it, mostly due to inflation, which is why I purchased the home, and due to improvements I made to the property. The combined force of the two over the past 7 months, 8 months, property's gone up by nearly 50%, which is remarkable. I don't think I'm a genius. Now, I knew that inflation was going to take off. I've known it. You've heard me say it back since the beginning of the pandemic. Never a question, which is why I urged all of you, go for your PPP and whatever stimmies you can get, because inflation's coming and you're going to pay for it, whether you get the stimmies or not. So you might as well get them. Hopefully, many of you out there listen to me. So back to real estate. Mortgage money is still available. Back in the bad old days before unlimited printing presses, I remember in the 70s, even the 80s, mortgage money could become scarce during a recession. But due to government mingling, due to unlimited printing of money, due to the government buying up mortgage-backed securities by the bushelful, we've never encountered that, regardless what happened to the economy. And until the government cuts back on credit creation, and this is really indirect credit creation, because what happens is your bank says, oh, Kerry, you want a mortgage? How much do you want? Oh, we'll give you $500,000, no problem. So they give me the money and they don't take it out of reserves. They effectively deposit the money to a checking account or create the money out of thin air. This is called credit creation. And then the money goes from my bank, my mortgage bank, to the seller's bank. So money is created. Then what happens? Those mortgages get packaged into a mortgage-backed security, a bunch of them, and investors, quote unquote, investors purchase them. Well, who is the investor of last resort? Yes, the Federal Reserve. There are other entities buying them as well, but with 3% interest rates, it's the government buying them. Until I see evidence otherwise, that's my story and I'm sticking to it. So effectively, what the government is doing is they're not printing up money for you to buy your house directly, but rather they're printing up the money after the fact. So if they buy it through Fannie or Freddie, it doesn't matter if Fannie and Freddie are government entities now, were seized by the government during the last housing crisis. So the governments have credit lines, Fannie and Freddie do. The money is created out of thin air is the point, all right? And then the government buys up the bonds, hence inflation, right? So it may well be that we will see a real estate collapse. If this happens, it's going to be far worse than the prior one in 08 and 09. Now, what you have to understand, the foreclosure system, in certain states, it's called judicial. In other states, it's called non-judicial. Non-judicial states, you execute a deed of trust, you default on your mortgage, the trustee has a sale in accordance with the laws and rules of your state, and the property sold off, and then you leave or you're evicted. There's a number of states like that, Arizona, California, a lot of big states, mostly in the West. In the East, we have mortgages. Mortgages must be foreclosed. Therefore, an action is required. During the last foreclosure crisis, New York was 3 years behind. New Jersey was years behind. Florida was years behind. All of these states, none of them could keep up with it. Now, I never encourage you to default on a mortgage because it's going to wreck your credit. If you care about your credit, you don't ever want to default on any obligation that you actually owe. However, the point is that even if everything goes to hell in a handbasket, you're going to be in your home for several years if you're in a judicial state, right? If you're in a non-judicial state, they might get you out in 6 months, maybe faster, maybe it takes longer. There's a lot of ways to tie these things up. I only digress because if you believe that inflation's over, then probably not a good idea to buy real estate. But if you believe that real estate is going to keep going up due to inflation, then it is one of the best ways to do it. Because if you put down 20% on your home, right, it's $500,000. You put down 20% and you borrow the rest, you're getting a subsidy on interest rates, and you're going to see inflation increase the value of your home.
Don't just survive, thrive. The Financial Survival Network.
Goldterra Resource Corp is a gold exploration company that has assembled a highly prospective district-scale land position on the doorstep of the city of Yellowknife in Canada's Northwest Territories. Goldterra is currently focused on expanding and delineating gold resources at the company's Yellowknife City Gold Project, with a goal of discovering over 5 million ounces. With ready access to infrastructure and multiple high-grade gold discoveries, Goldterra is on track to re-establishing Yellowknife as one of the premier gold mining districts in Canada. Goldterra trades as YGT in Toronto and YGTFF on the OTC. For more information, go to goldterracorp.com. That's goldterracorp.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
We see these home prices going up for several reasons. Number one is due to inflation, and that's causing new home prices to spiral out of control. And pre-owned homes are dictated to some extent by the new home market. So when you see new home prices go up 30-40% due to commodity inflation in lumber, in copper, in all sorts of things, you just know that your pre-owned home is going to go up as well. That's one factor. Number two is, since the last housing crisis, 08 and 09, the number of housing starts was way down, way down. And that has resulted in a tightening of supply. Number three is people fleeing from the lockdown states to the free states like Florida, Texas, etc. That has increased demand in those states. But even in the lockdown states, because new homes increase the rate of building new homes, building permits, for instance, is an indicator, an indirect indicator, actually direct. As a result, even in those states, there's housing shortages. In addition, people are fleeing these collapsing cities, places like New York, Detroit. You just go down the list and you see these cities, Minneapolis, and what are they doing? They're fleeing to suburbs of these cities, maybe going an hour or two north. It's no secret the way we work now has totally changed. Oftentimes you can work remotely, depending upon your profession. So even in states like Minnesota or Michigan or New York, New Jersey, Connecticut, people are fleeing these cities and they're going to the suburbs where there is, at least for now, a safer lifestyle. Things are safer. They haven't broken down as much in the suburbs as they have in the cities. So it's bad for the cities. But even in the cities, due to inflation, real estate is getting more costly. So you've got those four factors that are working in many parts of the country to increase real estate prices. And if, for instance, if you put $100,000 down on your home, $500,000 home, and prices went up 20%, you doubled your investment in a very short period of time because you're leveraged 5 to 1. Okay, for every dollar, or 4 to 1, for every dollar you put up, you're borrowing $4. So as a result, for every dollar that your home goes up, you're getting the benefits of leverage. If you got to live in a place anyway, that's fine. You got to live somewhere. And with FHA mortgages and others, you can conceivably put down just a few percent on the price of a new home or a home that you're looking at. So you got to be crazy not to buy a home if you can afford the debt service and if you're secure that you'll be able to afford it into the future. Obviously, if you can buy for cash, you won't have those problems. But the other thing that's occurred is rents. Now, we didn't even talk about the rents. That is factor number 5, driving home prices higher, because rents are on a tear along with everything else. So if you can rent your property out, it's an income producing property, have somebody else pay your mortgage and taxes, every dollar that your rent goes up is going to drive up the value of that property. So we have those 5 factors. I don't see anything that's going to change it. Economic collapse, well, If we collapse, we collapse. You could argue that the collapse already occurred during the pandemic. There's a limit to how much the government will put out. But the fact of the matter is, real estate, I highly recommend it, especially if you can do income producing real estate, if you can lever it up, if you can borrow down payments from others, cut them in for a piece of it. Creative finance and real estate really goes hand in hand. Hard to be creative finance when you're buying gold, hard to do creative finance buying stocks, hard to buy crypto with creative finance. Crypto could well go higher as well. It's pulling back a bit. In the face of all of this, if you're going to buy real estate, location is crucial. Don't buy in anti-landlord jurisdictions. Don't buy in war zones. Don't buy in decaying cities, of which there are dozens of them, especially in the north and in California. Don't buy there. Rent control. Don't buy in jurisdictions where rents are being controlled by governmental authorities. Now, rent control is something that could spread. They're talking about it, implementing it in Minnesota, places in California. This is a risk. And that's why you need to go to places where rent control is non-existent. Florida, Texas, Tennessee. Tennessee is another really hot state. So I hope I've answered some questions. If you got any questions about it, I can recommend people to you who can show you the way to real estate invest in real estate properly. You just have to send me an email address, kl@kerrylutz.com. Make sure you go over to financialsurvivalnetwork.com and please sign up for your free newsletter. Just sent one out today. And thank you all. This has been another Triple Lutz Report. Kerry Lutz signing out.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.